Over the past few years, quantum computing has evolved from a niche research topic into a major investing trend. And this trend is attracting global attention. In 2026, quantum computing investing is no longer only for tech insiders. It's becoming a real opportunity for forward-looking investors. This involves major players like IBM and IonQ to fast-growing startups, thereby redefining the future of quantum computing. Understanding the realistic return on investment scenarios. Quantum computing is a long-term play. This will help to understand the potential gains and the risks that come with investing in a rapidly evolving technology. From valuation volatility to regulatory shifts, this will help to explore the challenges while staying positioned for future growth. Why 2026 matters for quantum investing. The years 2024 and 2025 marked a turning point for quantum computing investing. Funding surged as global investors backed those startups who are building the next-generation quantum systems. These years also saw rapid progress in quantum commercialization. Companies launched pilot projects and new partnerships between research labs and major corporations. Industry analysts now agree that quantum technology revenues will accelerate through the late 2020s. The market is shifting fast, moving from pure R&D to early commercial deployments in finance, healthcare, and cybersecurity. According to McKinsey, quantum technologies, including computing, sensors, and communications, can generate tens of billions of dollars in annual revenue by the 2030s. Most of this growth will come from quantum computing, which is quickly becoming the centerpiece of deep tech investing. Quantum computing investing has been exploded in recent years. Both venture capital and public funding surged in the mid-2020s as confidence in the technology grew. Dozens of startups raised millions in private funding rounds, and the industry witnessed a wave of mergers and acquisitions that signaled a strong market consolidation. This boom confirms one thing: quantum computing has moved from theory to a full-scale investment theme. According to the Quantum Index report and multiple industry analyses, the market's growth outlook remains exceptionally strong. This means investors can expect a multi-year growth cycle powered by new applications in AI, cryptography, and data optimization. All these are key drivers for long-term return on investment. Quantum ETFs make investing easier. Not ready to invest directly in startups? Then you can still participate in the quantum revolution through thematic ETFs. Funds like the Defiance Quantum ETF offer diversified exposure to companies working in quantum computing, machine learning, and advanced AI technologies. These ETFs are ideal for investors who want quantum exposure with lower risk, making them a smart entry point into this emerging trillion-dollar ecosystem. How investors can get exposure? Pure quantum companies like IonQ, Rigetti, and D-Wave have become the face of quantum computing investing. These publicly traded pioneers represent the highest upside opportunities. On the other hand, they also carry higher volatility. For investors with a long-term view, the IonQ's latest financial updates show strong revenue growth driven by the increasing enterprise demand. However, like many emerging tech firms, they continue to invest heavily in R&D, reflecting a growth with loss phase, typically of early-stage disruptors. Pure quantum stocks offer massive return on investment potential, but they also require patience and risk tolerance. Not all winners in the quantum computing boom will be hardware builders. Major cloud providers like AWS Braket, Microsoft Azure Quantum, and Google Cloud Quantum are creating infrastructure that supports quantum applications. These firms often deliver steadier, lower-risk returns, making them ideal for balanced portfolios. For retail investors, quantum ETFs provide an easier entry point into this complex market. For accredited investors, private quantum deals are another high-reward path. Startups, such as the Kera, raised major funding rounds in 2025, attracting institutional backing from global funds. Private investments in quantum hardware and software require patience, large minimums, and longer exit horizons, but the return on investment potential remains strong as the technology matures. Companies offering quantum software platforms, simulators, hybrid algorithms, or integration services are capturing growing demand from enterprises, thereby testing the quantum-ready solutions. These indirect plays offer lower risk while still aligning with the broader growth of the quantum computing market. What realistic return on investment looks like and why timelines are long? Investing in quantum computing technology offers an asymmetric upside, meaning the potential gains far outweigh the risks. Once a fault-tolerant quantum computer is capable of solving real-world problems, it could unlock massive value for early investors and intellectual property owners. However, the timeline for full commercialization remains uncertain. The first wave is already visible through CAS models and specialized the niche applications in fields like cryptography, logistics, and drug discovery. As these technologies mature, quantum adoption is expected to accelerate rapidly across pharma, materials science, and optimization sectors. This wave of commercialization can create the first generation of pure-play winners and companies positioned at the core of quantum innovation. For investors, these early movers may deliver massive multiples and long-term return on investment as real-world applications expand. The incremental commercialization of quantum computing is already reshaping the tech investment landscape. These developments are creating powerful opportunities for specialist quantum firms and large technology partners, especially in cloud computing and enterprise software. As adoption grows, investors who recognize these early revenue signals could tap into one of the most sustainable growth trends in tech for 2026 and beyond. Tech startups face significant revenue growth challenges as technical bottlenecks and competition from advanced classical algorithms slow progress, forcing many emerging technology ventures to consolidate or fail. Investing in quantum computing carries significant risks and opportunities. Scalability limits, qubit errors, and the quest for fault-tolerant designs continue to challenge startups, and a failure in one approach can sink a company. Strategic government funding and regulation can redefine winners geographically, highlighting the importance of staying informed. Invest gradually over time to smooth out risk and avoid chasing market swings. Track milestones, not prices. For retail investors, quantum should stay a small, single-digit portion of your portfolio. Quantum investing rewards patience, education, and strategy. Stay informed, trust milestones over hype, and make every quantum investment decision a smart one. Quantum computing investing in 2026 offers both excitement and uncertainty.